Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. What is happening off the back of the volatility on the coronavirus pandemic in as far as markets in Kenya are concerned? Today, markets have been very quiet. We've seen Safaricom only trade 5 million shares as investors keep away. We've also seen the currency, the Kenya shilling trading against the US dollar, touch a new low of 105 shillings. And it could be this is what is keeping the investors away. As the currency continues to weaken, it would possibly indicate to the foreign investors to sell out of their holdings in Kenya. Is this a fundamental move, or is this Central Bank of Kenya buying? The jury is still out on that. Over and above that, we have seen a flurry of corporate actions in terms of reportings coming in over the day. We did see CIC report a 33% drop in profits after tax to 321.6 million. Not good performance there, especially for the investors, the retail investors who are normally picking up this penny stock. This decline has been going on for the last 3 years and doesn't seem to be abating anytime soon. In the banking sector, Standard Chartered started off the day by announcing its 2019 results. The numbers were up 2% to 8.2 billion. There was flat growth in as far as income was concerned. And what helped these numbers to return a positive growth factor in the year was a reversal on the loan loss provisions over this particular year. For about 3 or so years, Standard Chartered has been forced to deal with the incidence of non-performing loans with its ratio far above the industry average. Today, the loan loss provision reported for the year was about 537 million compared to a high of 4.3 billion over the last 2 to 3 years. Certainly some good improvement there. What is concerning is the fact that the revenue line is not growing. And given this pandemic, with these numbers continuing to the year, well, doesn't seem so. But what management did do to be able to appease its shareholders was declare a final dividend of 15 shillings per share. If you combine this with the earlier interim dividend of 5 shillings per share, it brings it to 20 shillings per share. And in a downward cycle on the NSC, this share is actually reporting a dividend yield of about 10.7%. Looks like it will probably get better as the price comes lower. But are you buying a dividend yield, or are you buying into weak fundamentals in the short to medium term? Cooperative Bank also announced its full year 2019 results. Very different performance compared to what we've seen at Standard Chartered. The numbers were up 12.4% on a year-on-year basis as the company reported 14.31 billion in profits. The key trigger for these numbers was largely in the other income line, which doubled in the year as the company launched its mobile platform as well as its digital transactions with its existing cohort of customers. We have had very good reviews on this particular platform, and it has been able to help bolster the performance on a year-on-year basis. Now, when we look at mobile banking and the integration of the banks in Kenya riding off the railroads of Safaricom, we have seen some very good performance there. We have seen banks being able to enhance their non-funded income from the income that they generate off this mobile platform. Now, this is the catch. Yesterday, we did hear the Central Bank of Kenya governor issue a list of measures to help the economy and the business community to be able to mitigate the coronavirus pandemic. Some of the measures included personal debt relief, where you as a loan holder can actually approach your bank and negotiate with them to get at most a 1-year moratorium in terms of your monthly payments. This also applies to the SMEs as well as the corporate institutions that have taken out debt. Some good reprieve there, but then it's neither here nor there. Over and above that, CBK did say that any fees affiliated with mobile banking will be waived in this season. There's something that we caught that was very interesting. The governor said that from here on, at least as we're dealing with the coronavirus pandemic, your bank account and your mobile account will be synonymous. What does this mean? It suddenly got my mind thinking, and I went to speak to the experts to be able to help me understand this financial technology that Safaricom has been offering. Could it be that we have made Safaricom a bank by giving them direct access to the operating system and the cash that flows through the banks? Well, I can't be able to answer that fully, but in studio, I am joined by Edin Dishu, who is the CEO and co-founder of Wapi Pay, and he can be able to help us understand the technicalities of these comments and whether when everybody else is selling out of stocks, perhaps you need to be putting your money in Safaricom. This is a conversation we'll delve into after the break. This is what I need you to do in the interim. I need you to go to the Metropole TV page on Twitter or go to my handle, Bithemwema, and tell us where you're watching from, what do you want to know. We also have a live SMS line, that's 20146. I'm curious, where are you watching from and where are you putting your money? We will see you after the short break.